This is our October economic report for 2023. Let's get right into it. First of all, let's talk about the debt. The government debt is, U.S. government debt is $33 trillion. It's difficult for people, including myself, to fathom what $1 trillion is. So let me just take a moment to try to describe to you what that might be. It's 10 to the 12th power. The Earth is 1 trillion meters away from the moon. There are over 1 trillion stars in the galaxy. And if you line dollar bills up one after the other, it would take $1 trillion bills to get to the sun. And we're only talking about 1 trillion. We owe 33 trillion. The federal funds rate is the rate the Federal Reserve Bank charges its best customer. It's a key rate. It's at 5.25%. That's important because, again, that's the best customer of the bank. That's the best rate you can get. Oil prices are on the way up. They're over $90 per barrel now. Credit card debt has hit a high of over $1 trillion. Things are not looking good despite what you might be hearing. Office vacancies are at an all-time high. The IPO market, initial public offering market, is beginning to open up a little bit with Instacart, with ARM from SoftBank, and with NVIDIA. Those are the three most prominent IPOs, initial public offerings. Student loan debt repayment begins on October 1st. I'm not sure how that's going to impact because there are so many different myriads of ways you can pay your student loan off. One stock I'd like to talk about briefly is Disney and Nike, two stocks actually. They've been doing very poor. Nike mainly probably because of China. There's something called the yield curve, and there's something called yield curve inversion. Think of it as this. The yield curve shows bonds and the price people would pay for bonds. If the yield curve is toward the low end, like 2 years, but the bonds are like 2-year bonds, and there are bonds like 10-year bonds, and people are willing to pay more for 2 years than 10 years, what that tells you is they don't have confidence in the economy 10 years from now. That's what a yield curve inversion is. And that is probably one of the biggest signs of recession. We've seen that for now 14 months. It looks like we're headed for recession. President Xi has visited President Modi in China. Technology jobs are slowly being stripped as they start to lay off. The major Magnificent Seven and other companies start to lay off technology people. Mortgage rates are at an all-time high. The jobless rate is beginning to change somewhat. There's going to be a little more employment. Then there's the problem with the government shutdown, which is looming out there. Back to China, they're experiencing some difficult problems. It said their employment rate among teenagers is 20%. Here in the United States, we have the United Auto Workers Union strike. It looks like it's really gonna happen. By the time you see the video, it might be going on. The problem is, if you give the union the type of money they want, eventually the American auto industry will be uncompetitive. We deal in a global market. There's something called ISM PMI, which is the Purchasers Managers Index, the Institute Supply Managers. What they basically do is they tell the government what the trends are looking like. For example, a purchasing manager would know if he's going to purchase more goods in the next 6 months, less goods, what his inventory is like. They would know if they're going to hire or release people. So they get a forecast. They give forecasts to the government on how things look 6 months down the road, and it's not looking good. Consumer price index was up. Its inflation rate this year, at this point, is 3.7%. President Biden introduced his Bidenomics plan. It's nothing new. It's never worked before in the past. It's been called different things, but spending more money doesn't help the economy. The Saudis have cut oil production. That's increasing the prices. The G20 had met in New Delhi. President Biden has gone to the UN, and the Chinese and Russian delegation didn't really show much respect there. President Biden also visited Vietnam last month. President Biden and his staff have decided to release the $6 billion that was held in custody of the United States as a frozen asset to Iran in exchange for a prisoner exchange, which is something that may be a dangerous precedent for us going in the future. Also, the drilling in Alaska, the president decided not to allow the drilling that was passed under the last administration. Strategic petroleum reserve is still at a low. We're not at the price range where the president said we can begin to refill it. Travel is slowing. Elon Musk has called for a 6-month pause in AI, but it's a global thing. There's no sense in that. Builder sentiment is down. As we said before, there's a threat of the government shutdown. By the time you see this, that might have occurred. Falling tax receipts. Job growth is slowing. And things don't look well at all. My personal opinion is I think that this is not going to like a soft landing. It's like a very hard landing, and we need to prepare for that. Hope you enjoyed the video. If you like it, give me a thumbs up, and have a great day.